All right. Good morning, everybody, and welcome to this week's stock market review. My name is Bennett McDowell with traderscoach.com. Great to have you here on this March 27th, 2024. All right. Market's kind of interesting right now. Still pushing up. They pushed up last week on the interest rate announcement of possible more rate cuts. I still think we got to wait on that. Not seeing a lot of rate cuts this year. Still not seeing it. I think we'll be lucky if we get one. They say basically three now, but we'll see what happens with that. Don't take that to the bank quite yet. We're going to look at Bitcoin today as well, and a few other markets that I think are important to watch, like gold, silver, crude oil. I also want to look at the bond market, TLT, today, and see how that is doing. I think bonds are going to be good at some point, but I'm not so sure it's quite ready now. Silver seems to be ready, so we want to look at that as well. So we got a lot to cover. I'm also going to cover the housing market. All right, the housing market, I think, needs to be covered each and every week. It's a big deal for a lot of people out there. A lot of their assets are wrapped up in the housing market, so we kind of want to keep a close eye on that. All right, so let me go through a few administrational items, and then we'll go ahead and get started with the charts today. First thing to cover, of course, are the risks involved in trading. Like I always say, without those risks, there is no opportunity. So the two really go hand in hand. But we want you to be aware of the risks, of course, and protect yourself as best as you can possibly protect yourself. There are many risks in the market. The best way to guard yourself, of course, is always trade with money you can afford to risk in the markets. That's step number one. Do not trade with your rent money or your mortgage money or anything important that you're going to have access to. So please realize that. That's step one. Step two is on each and every trade, know when you're going to get out. And usually that needs to be a point of spotting when the trade is a failure. And get out, keep your losses small, calculate your trade size. I'm going to show you a couple of books that will help you specifically with that in just a moment. But that's kind of where you want to be with short-term trading. Always keep an eye on your risk. Many new traders tend to focus on entries and exits only and don't think much about risk control until they get burned once or twice. So we're trying to get to you before that happens. All right, the next thing too is we're going to be looking at stocks. I'm going to be making my opinion analysis on each and every market we look at. Run those by your financial advisor. We don't know your personal situation. They certainly should. And so before you allocate any real money to anything we talk about here, get their go-ahead first. All right, so keep that in mind, and we deal in a realm of probability. So past performance does not guarantee future results. All right, a couple books here on this slide. The one on the far left, the Trader's Money Management System, that's been out a while, done very well in the Amazon ratings. Then we have my new book, Money Management for Traders, came out last year. That's really exceptional because what it's doing in that book is we strip down all the fluff and gave you the important points you need to know to start implementing a good, solid risk control program into your trading. So you may want to pick that one up. And all these books, in today's situation are pretty inexpensive. All right, Elliott Wave Techniques Simplified. It's a book on technical analysis called the Elliott Wave. We use it a lot. Great book on that. And my new book, The Art of Trading, on the far right, coming out this year, brand new book published by Wiley. And that book, of course, is going to cover current market conditions as well as a lot of the trading techniques that we use here, and of course our software that we use as well. So definitely check that out. You can pre-order that as well. And that takes us to the economic calendar. So I'm going to open this up. I'm going to magnify this just a little bit so you can see it. All right, so we're going to start out with today, of course, Wednesday, March 27th. We got crude oil inventories. I'm only going to mention the most important ones for today. So keep that in mind. There are other announcements that do come out, but these are the kind of ones I focus on. No FOMC today, so you don't have to worry about that. We've got GDP on Thursday. We got initial jobless claims Thursday, Chicago PMI. All right, then we go to Friday and in the week with Good Friday, of course. And so that will affect the markets on a holiday schedule. Then we have PCE and the Fed Chair Powell speaks on Friday in the late morning, Eastern time, of course. All right, so nothing much on the economic calendar that I think is going to throw anything off. I don't think the Fed Chair Powell is going to say anything that we don't already know already. All right, so that takes us to the next situation, which is our trading software that you're going to see me use on all the charts that I have. Some of you, many of you here probably have it already, but if you don't and you're interested in it, we'll put a link up in the recording down below, or you can go to our website. We have scanning software, we have entry and exit software, and risk control software. All right, and so the first market I'm going to cover today, out of many of them, are the Dow Jones. I'm going to go to full screen here. And on the Dow Jones, what we've done is we've used the daily chart to start out with. So every price bar here represents a full day. And I've put some numbers on the chart, and the first number you'll see is this one up here, labeled as an Elliott Wave 3. So if you're into the Elliott Wave, basically the Elliott Wave states there are 5 waves in a trend, and then the trend ends on the 5th wave. And then it starts another trend or major correction in the opposite direction. So in this case here, we had a wave 3, as it turned out, in 2022. Remember that top back in this area here. Then we had a fairly decent sell-off in the market, taking us down to basically a low in October. And then we had a rebound, and that was in 2022. Then we had a rebound during the entire 2023 for the most part. And then it broke out in late 2023 above the wave 3 high, which pretty much certified that we're now in a wave 5. And we're working our way now up to a Fibonacci extension, which is a form of technical analysis based on the wave count. And it's showing a target zone for wave 5, and that's in this green box up here, between 40,281 to about 47,426. So that's where we expect the Dow Jones to eventually reach. And as you can see, we've gotten darn close to it. Now, we've got down here, I'm going to erase what I've written already. We've got down here bearish divergence starting to show. And what that means is that when prices make new highs, the indicator down here called the OWL, which is one of ours that we've created, is the optimal wave locator. And that is measuring momentum. And momentum, if it's not going up dramatically like prices, you have a divergence. And you can see we have a sloping line down on the actual momentum that's created in a histogram here. But notice that prices are going up. So they're opposite. One's going down and one's going up. That's called divergence. And in this case, it's bearish divergence. Now, bearish divergence tells us that there's not as much enthusiasm in the current high as we had in the previous one. So that's kind of significant in that we want to, of course, take note of that. So you usually see that in the area of a mature trend. And while it's not a trend killer in itself, it does indicate basically a warning to be a little careful. We could be getting closer and closer to a top. Now, what I think is going to happen with this is we haven't hit the target zone quite yet. And basically, in the way in which I've drawn it, 70% of the time, wave 5s reach this target zone. So it's a pretty good probability that we'll get into it, but it's not 100%. 15%, they're a little shallow, but usually break the top of wave 3. And then 15% of the time, they exceed the target. And so that makes up the other 30%. So we're in an area where the market could sell off right away from here, 15% chance, and we're darn close to that wave 5 target zone. So, you know, we've got to be careful a little bit here. However, we really haven't had any profit taking at all to speak of since the October low of last year. And so my thinking is we usually, in a situation like this, get a pullback and one last hook up. And that usually represents the 5 waves inside wave 5. So that would be like a 3, a 4, and then 5 of a major 5. All right, so that's kind of how that works out. So I'm thinking we'll probably get a pullback and then another high. Now, there's a lot of speculation out there, especially on YouTube, that around the mid-April timeframe to April 20th, there is expected to be some type of event. And I'm not sure exactly how accurate that's going to be. Some people use data sets and so forth to take a look at things. But that's kind of the conclusion out there from those people that use that kind of information. And many people think it's going to be the start of the major sell-off. The wave 5 will be over and we'll go down. Some people think it's going to be this or that. Not sure. So I try to stick with the charts as much as possible and stay grounded that way. And I suggest you do the same. So in a case like this, my first reaction is going to be, I think, no matter what happens, I think we're going to kind of get a pullback and have some profit taking. And maybe some event will actually come out in April that could cause that. But I don't think it necessarily could be looked at as a major sell-off into a bear market yet. All right, so we got to be careful about that. Now, if we keep going down and go below this low here, then I'll change tune. I'll say, okay, now we're in a major sell-off. All right, but that's got quite a ways to go. We got to go down to 31,000. So you're talking, almost what, 9,000 points to get down there. So I'm thinking more like we'll come down a little bit and then have one more rally up into the wave 5 target zone. And I'm going to show you exactly where I think that could come down to, provided, all right, we have ended this move up that we've been in for so long since October. All right, and then so one more move down would be very likely, and then another move up and then into the target zone. All right, so in terms of timing, what does that mean? All right, so probably you got to remember this is an election year. All right, so the Fed's going to try to do everything possible to keep the market as stable as possible. So I think any sell-off we see in the market, all right, is going to be temporary, and then the market should recover and make new highs. All right, that's just purely from a situation of looking at the dynamics of the Elliott Wave and technical analysis. If we shift hats and think about it from the Fed standpoint, hard to know exactly what they'll do. They may lower interest rates in order to make sure that sell-off into the profit-taking zone doesn't get carried away. All right, so we see more enthusiasm after that, and the markets move back up. So we'll see how this plays out. But overall, that is my synopsis or analysis of the markets. And it not only applies to the Dow, but it applies to the NASDAQ and S&P and most major market indexes out there. All right, now, with that said, the next question is, where do I think this pullback is going to go? And so if we look at the next chart I'm going to show you, this is a shorter term chart called the 60-minute chart, but of the same market. So we're still in the Dow Jones Industrial Average here. And the profit-taking zone, if it happened, and this chart was drawn on Sunday, March 24th, if the market makes new highs, we have to change the profit-taking pullback zone higher. But as of Sunday, the zone was between 37,583 to 36,152. And again, very similar to the percentages I drew on the wave 5 zone for the daily chart, this has a 70% accuracy rate, 15% in between here and the red line, indicating a fib retracement level of 23.6, and then a 15% lower level here. But you can't go above wave 1, which is down in this area here. So 1, 2. So we're probably looking at a level that for normal profit taking. So don't panic if you start seeing the market move down a bit. But by the same token, it shouldn't go much lower, of course, than that pullback zone. But it does do that 15% of the time. So keep an eye on that. Now, one of the things that was interesting going into this week, we did have a green bullish PTF now down here. So the chances of more highs are good there as well. So that's an indicator that when it's green, it's indicating more highs. So we're probably going to see more highs on this chart, even possibly before a pullback on that. And if you have any questions, feel free to ask. I'll try to get to those, but I do have a lot of material I want to cover today. All right, S&P 500, very similar. You can see how close we're getting to the target there. And again, I put the pullback area on the left-hand chart, which represents the 60-minute chart. And that has a pullback zone between 49.12 to 46.94 with an overall target for a major top between 5.652 to 6.998. Okay, so there we have it. Now, one thing I want to say for both the Dow and the S&P and also the NASDAQ, which is reaching up to its target as well, I'll go over this in just a moment, is that once these top targets are hit, then what? Well, then I expect a major bear market. So don't think I'm not thinking bear market out there, because I am. But I'm just trying to time it as best as possible. And I don't see the bear market really hitting until the end of this year or early next year, and well into 2025, maybe the entire year of 2025. So I expect a bear market bringing the markets itself down at least 50%. That's kind of where I'm coming from, that, maybe even more, okay, before it's all over. And then we should have a recovery later on in a couple of years. So for now, enjoy the party, but I think the party will end. My only thing is I don't see it quite ending next month. That's where I'm coming from. Now, I could be wrong. And if I'm wrong, I have a point on the chart that will tell me I'm wrong, and I'll change my analysis. But that's kind of what I'm going with right now. All right, so there you have that. Now, on the NASDAQ here, the pullback area that I see is, if it did it right away, would be 14,961 down to 14,038 on the index. And the overall target on the far right-hand side is still quite high at 19,310 to 24,983. All right, so that's the NASDAQ. And, you know, the NASDAQ, the big boys in the NASDAQ, the Googles, the NVIDIAs, and the, you know, the list goes on and on, are really powering this market up. And I don't think it's quite over yet. All right. All right. So let's move on a little bit further here and go into Bitcoin. I've got Bitcoin here. So I'm going to show the live Bitcoin chart in a little bit, as well as all the live markets we pretty much looked at. Bitcoin has been on a tear. It had a nice pullback, which I had stated last week was a great buying opportunity. All right. An accumulation phase. So that seems to now maybe over. We're starting to move back up on Bitcoin. I'm going to take a look at the live charts. There is a possibility of one more low before it takes off. Now, Bitcoin is a kind of a different than equities, obviously. Okay, this is a whole new animal. However, it has a chart. All right, and you're looking at it in front of you right now. So I'm a chartist. So all my analysis is based off what I know, which is charting. There's a lot of people out there, a lot smarter than me, that get into the math and all that, the halvings and the cycles behind Bitcoin. And there certainly seems to be something to that. But what is interesting is what I've noticed when I analyze that stuff is it usually correlates with the chart patterns anyway. So if you know the chart patterns, you kind of fit within that model of the more advanced type of analysis people do on Bitcoin. So what I'm thinking here on Bitcoin is I think we've got a short-term target up here of 75,000 to 83,000. That's kind of where I'm putting it right now. That's short-term. So on the next high, we should get there. And let's analyze that just a moment. So if we take a look at that on the left-hand chart here, this is a 3, 4, 5. Now, this is a short-term chart. It's a 60-minute short-term chart. So that's a wave 5. Now, knowing what you know based on what we talked about Elliott Wave before, once you get to wave 5, that's usually the end of the trend on that time frame. And so then we go into a major move down. However, let's take a look at the daily chart, which is right here, which gives us a good look at the intermediate trend. So if this does not turn red, but instead stays green, and we get this pattern unfold and get another high in here, there's your hook, and there's your top of wave 3. And there are 5 waves inside wave 3. So that's what I'm going with right now, unless this owl indicator on the daily chart turns red. Then we're going to be in a major wave 4, and that's going to be a big deal. Okay. So currently we're going to look at the long-term charts in a bit, and I'll show you how I'm playing this. I did accumulate some during the pullback here. And so we're set now for the next move up. There is a chance we could get another accumulation opportunity. I'm going to go over that possibility in a moment. But for right now, that's all I want to say about Bitcoin until we look at the live charts. All right, next slide is real estate. Okay, now if you've been coming here every week, you certainly know I've been saying there's a bubble in the real estate market. I have not changed my stance one bit on that. And on this chart here, this is the Case-Shiller index here. And basically what this chart does is it measures average prices in the United States, and that's what the Case-Shiller index does. So I'll put CS on that red line because that's where it is, against the CPI, which is a consumer price index, which is inflation, okay, down here. Now, real estate, as you've probably been told since you've been born, that it's a good investment and a good hedge against inflation, right? And you can certainly see why. It's always maintained itself in a fairly orderly fashion above the inflation rate. So that's a good thing. So not only do you get a place to live, but you get a place to at least make sure your money doesn't deteriorate. All right, then there's times when home prices, like any other market out there, takes off and gets abnormally higher than it should. And you can see that in this graph when it breaks away dramatically from the CPI. So if you go back to the 1980s, you had a nice orderly run, had a little uptick in the 1990s, if you remember, and then we had a little bit of a recession come in, so it moved it back down, but nothing really dramatic until we got to 2000, low interest rates, and the market just took off. And during that period, not only low interest rates, but if you could breathe, you could get a mortgage. So there were no income check mortgages. Everything was, you had the securitization of the real estate mortgages. And so they didn't really need to check with income. They just packaged these things and sold them on the value of the home, and then took the other side of the bet on these institutions with derivatives. And so basically it was easy money and easy lending, and off it went. And then we reached the 2008 top here. All right. And everybody started defaulting on their mortgages because they were overextended. The economy got a little flat. People lost their jobs, and problem. Okay. And that was, of course, the financial crisis. And, it lasted a couple years. It didn't just start. It kind of, you can see the bubble. The housing prices remained high before reality set in, and then it busted. So then it busted, and you know the story. Everybody remembers 2008. It came down, but it got down to a certain level where, once again, the bad mortgages were washed out. Lenders learned that hopefully their lesson a little bit then, and started checking incomes, and we had stability return to the market. Interest rates were very low. They had to lower them even more to get people back, get the economy out of a recession. And here we go again, up. All right. So then we came back up, interest rates low. We had COVID, easy money again. In fact, the government was giving you money, and it was also deferring mortgage payments and most payments of everything else. And so housing became extremely strong. Everybody wanted at that point to get into housing. And of course, with COVID, a lot of people were moving out of the big cities and creating more demand in the suburbs. So you had a lot of transactions going on. And you had a lot of movement, and housing took off. All right. And then here we are today. All right. Now, housing the prices are still fairly high. I would not say we've seen the effects yet of what I expect to see. All right. I know in some areas it's very local. Some areas are down a little bit. Transactions are nil for the most part, though they have increased this year, from my understanding. So that's a good sign. But an increase in supply will probably start to begin a decrease in prices. All right. So we'll see what happens with that. But bubbles can last, a few years, and we've certainly seen that already. All right. We haven't seen a big dramatic drop. But if history tells us anything, if we look at this one chart, look at where we are. We're twice as high now from the CPI as we were back in 2008. That doesn't sit well with me. And I think probably we're looking at a 40–50% correction in order to bring housing down to the CPI level that makes sense again. Okay, so, that could be looming. So you got to be careful about that. All right, now you need a place to live. So, be smart about it. But by the same token, if you can sell your home now and make a ton of money on the equity that you may have, especially if you've been living in it a long time, and then go ahead and look for something that you can get all cash, not a bad thing to do, maybe. Okay, maybe scale down a little bit and buy something all cash so you can get out of debt. All right, I think that's a number one thing. So anyway, keep that in mind. Housing bubble, I think it's not a matter of if, it's a matter of when, and it's coming. So be careful with that. All right, now let's go on to a couple more charts with the housing that I like to show. And this is one here. Let me do this a little bit, enlarge that. So this is now a different chart leading to the same results. Home prices versus income. Now, this was done by RE Venture Consulting back in the summer of 2023. I'm hoping they'll do another one in 2024. And basically, it's showing right now that on the far right-hand side of the chart, this area here that's intense red is when we're in a bubble area. Okay, so that's a bubble. This area was 08, the financial crisis, and now we're even redder now than we were here. And then down here is the average income. So what it's looking at is prices relative to incomes, average incomes. And we're way out of whack, meaning people can't afford homes at these prices. So based on their income. So that's a problem in the housing market, especially for first-time home buyers. And this includes first-time home buyers, not the mega mansions. Okay. So based in 2003, they were home prices are 31% overvalued according to this chart by RE Venture. And I would say they're even higher now because prices have hooked up since the summer of 2023. They're kind of leveling off now, but they are higher than they were. So there you have it. Okay, so again, another table or chart that shows us home prices are way out of whack. All right, and then the next one I want to show you down here, all right, is going to be, of course, the debt to income ratio. And let me enlarge this one. Now, this includes debt like cars, credit cards of the consumer, not income, but debt. And again, we're bubbled here, okay? So during the housing bubble of 26, 27, I would say even 2008, all right, the home buyer debt to income ratio now is averaging 40% in 2023. Okay, those are near the worst affordability levels on record, according to the FHFA and the calculations done at RE Venture Consulting. So it's even worse than the 2006, 27, 28 bubble. So that's not good, okay? So people are in debt more than ever. And with the higher interest rates that they have now on the cards, I mean, for God's sakes, I think they're like 29, 30% rates. I mean, geez, right? Those are pretty tough for people to handle today. So it creates a problem, all right? So we've got 3 graphs here I've showed you, all of which are indicating an issue. And then finally, I got 2 more here. Fine, this is one I added for this week. New listings, again, by RE Venture. This is pretty current. This was February 2024. And we're seeing that new listings now are starting to bounce up in February. I imagine they're even increasing at this particular point since we're getting more into spring. So that's at least a sign that people that have waited on the sidelines may be now seeing that, okay, this may be a good time to sell, or basically people move this time of year and in the summer to get ready for the fall when their kids go back to school. But not only that, I think the people that waited on the sidelines as interest rates were going up now see that maybe they're going to be flat. They may come down 25 basis point. This may be a good time they can get out. And so we're seeing more listings, which could mean more supply, of course, and more supply could equal housing starting to come down to real levels. What you see in Zillow is the estimated. What is really transacting is another thing. All right. And then finally, this is kind of a neat chart here. This shows states with the biggest increase in new listings, February 2024. Again, our Venture app again. And depending on where you live, you can look here and see that there are more listings throughout the country than there were. Interestingly enough, though, I'm looking over here at New York, and I see a minus. All right, minus 3.45. Let's see if there's another one. I don't see another one minus. Everything is up. Like Washington's up 26.8. California's up 4.9. Arizona 8.7. Utah. Oh, here's Nevada. Nevada down. All right, Utah. So there's not. Most of them are moving up. Okay, So we'll keep an eye on that. So that's kind of interesting as compared to last year. All right, so those are all the tables I want to show you. Feel free in the comments if you want to list what you're seeing in real estate in your neck of the woods. Would be interesting. But I see eventually some type of crack in the real estate prices, and they have to come down quite a bit. All right, now I'm going to go up to the live chart on Bitcoin here and take a look here. I'll start out with this, and then I've got some markets here I'm going to just toggle on over. And this window at the top is our scanners. I'm not going to be really using those today, except to get around the platform a little bit. And I'm on NinjaTrader, great platform. Okay, TradeStation's a great one too. We've got a number of great platforms out there that our software works in. So right away, a couple of things I'm looking at. Here's this target I'm looking at here. So my point with this is we may start to see this hook up. We still got a green PTF here. And then after this hook, I'm going to have to redraw fib retracements again on this chart here. So if this stays green, we break out, make new highs, and we get up here and we start to see some selling. Personally, that could be the top of a wave 3, and I'll have to redraw the fibs, and I'll have to see where they come out, but I may start taking some Bitcoin off the table. Now, many people would say, oh, how could you possibly do that? It's going to 100,000, 120,000, and your target is around 80,000 to maybe 91 on the next move up. Okay, well, that's right. I don't disagree. It could go to 100 and 120, and that's what this target zone is telling me. But before it gets there, we're going to see a nasty wave 4 correction on this time frame. And I don't want to be there for that. Okay, I do not want to be there for that. So I want to get out, and then I'll get back in when it hits the next fib retracement. Now, another thing to think about, markets in general are counterintuitive, meaning if everybody thinks Bitcoin's going to 100 to 120, that's usually the kiss of death that it won't, because it's contrarian. All right, the herd is never right in the markets. And I've been doing this a long time. So that causes me concern that on this next leg up, they think it's so certain that it's going to go to 100 to 120 that I kind of want to run the other way. So I'm thinking more realistically, and this ain't a bad price, folks, 80 to 91 is a target, short-term target. After the halving, this could come in April, could come in May, could come June, that just be careful. And we're going to watch it every week, so tune in, okay? If it keeps going, I'll stay with it. But if I see some pullback that I think is dramatic, I'm going to start dumping some of my Bitcoin at those levels with the feeling that I don't think the overall bull run is over long term on Bitcoin. But I do think you don't want to be caught at the top of a major wave 3 on a daily chart unless you want to hold it through a 40% reduction. That's the problem, okay? So think about that. You can make your own choice. The weekly chart is bullish, so no matter what pullback we have here, we should recover and go higher. All right, my idea is to get out before we see that. Now, here's another alternate that could possibly happen, and I just want to throw this out. This is not the higher probability possibility, okay? I want you to realize that. I'm going to open up just a minute, or at least expand this daily chart. Now, in terms of the Elliott Wave, corrections come in what they call usually ABC patterns. So if this is a wave 3 top and we missed getting out up here, we're not going to really know that until it takes out this low and goes down here. So I drew in some fib retracements, assuming this is the top. All right. My priority analysis here is that it's going to get to 80 to 91,000 before it goes into a major top here. But if I'm wrong, and I always calculate if I'm wrong, all right, then if we take this out, then we're going down to 55,773 to 44,678 at this point. Okay, so at that particular point, you know, if you want to get out here, you can, or at that particular point, you're just going to get kind of stuck maybe and come on down. And we're not going to know until we take out that bottom. So if this is a 3, this would be an A. This could be a B and will remain a B until we breach the top, and then C. All right. So that is a possibility that could be unfolding. What I'm thinking is the ABC is located in this chart over here already. And so ABC here is inside this wave, and we've already bottomed. This is a hook, and we're still in wave 3. All right, so that's just a little clarification. All right, and that's why, that's what makes trading tricky. Okay, you got to kind of assess the different scenarios that could unfold and decide your plan of action from there. All right, so that's Bitcoin. All right, now let's cover a couple more. I want to take a look at silver as one, and then we'll wrap it up. I'm a little over today, but a lot of good stuff. All right, so silver had a very, very nice pennant. You can see that on the center chart that I drew, and it broke out of that pennant. We are now bullish on silver. I will be even more bullish once we clear these tops on the actual longer term chart over here. Okay, we haven't quite cleared those yet. I want to get above the 24 mark, but I'm thinking it's okay. Okay, I think this is a good possibility to accumulate it at a decent price. And I think we've got to possibly break out of a compression channel. So I'm liking that, and we'll see what happens. But I think being long right now is A-okay. Just put your stop below the second pyramid down there to keep you in during any volatility. All right, let's take a look at gold. All right, gold is come up an awful lot. We've got yellow PTFs except on the 60-minute chart. So we got probably one more little high on this. I personally think long term, all right, crypto is going to crush gold. That's my own personal opinion for a variety of reasons, especially if you get in the right one like Bitcoin or something, because of the fact that in this new age, that is a great direction to go. It's portable. All right, gold is not as portable. So you have that issue. So we may be getting into a new dimension where cryptos become the safe haven, so to speak, instead of gold. Of course, the gold bugs don't like me to say that, but by the same token, if we go back and open up this chart up here, we can certainly see this was a 3, 4, 5. And as I said, my target on this is around 220 to 240. And we're getting up there, so a little bit higher on this. And we have bearish divergence that's been developing ever since. Okay, even this, I didn't draw the line very good, but even this is lower than this, and this is lower than this. So a little concerned about gold in terms of outpacing Bitcoin, because I don't think it's going to happen. All right, could be wrong. All right. I have been known to be wrong, right? All right, USO. All right, here's the next one here. This is crude oil. My target on this one is 99 to 125, which means you're going to see a little bit of pain at the pumps when you go put some gasoline in your car. But you can hedge yourself by buying some USO. All right, so that's my target on that. I think we got a good bottom back in 2023 on the long-term chart. So 3, 4, and 5, okay, with our fib target zone at those levels I mentioned. All right, let me take a quick look at TLT, and then we'll wrap it up today. TLT is the bonds. Let me look at natural gas after this too. TLT is the bonds here, okay? Now, I've got a red PTF in the long-term chart, so I'm not ready to go long on this yet. Some people out there, Harry Dent wants you to go long. I'm not long yet on that until that indicator right here changes, because this is indicating we do not have a bottom in TLT yet. So I'm not going to put this as a buy. I know we've had a little retracement. It could get to 110 to 127, but I don't think it's a long-term hold. Okay, if you want to trade it up to there, okay. But for a long-term buy at this particular point, I don't see it yet. All right, and then UNG is natural gas ETF. And these are all in the futures markets too, still reaching more lows. Okay, PTF is red, and we've got bearish pyramids. We're still climbing towards the bottom here. Okay, do I think natural gas will be a good buy one day? One day, but not now. Okay, so that's it. All right, so that's pretty much it for today. Okay, I want to thank everybody for coming. This will be posted on the YouTube channel, LinkedIn, and of course Facebook as well. And you can watch the recording, and then I'll put at the bottom of the recording links to software, books, etc. So thanks for being here. We'll be back again next week. Interesting times we live in. My suggestion for everybody here, when that market top comes, whenever it does, between now and the end of the year, all right, you want to be out of debt. Do not carry debt into the next cycle. That's my suggestion. Do get out of debt before investing or trading in the markets. Step one. And then you should be able to get through that. Okay. Really important. All right. So we'll see you next week. Have a good one. And thanks so much for being here. I'll put a little music on and then we'll end.